Good morning, listeners. I'm Noah Mercer, and you're tuned into the FinMonkeys Morning Brief. Let's get you up to speed on what's moving the markets today. First up, India's finance ministry warned that rising fuel costs and an uncertain monsoon could push inflation higher just as the Reserve Bank readies its next policy decision, a signal that rates may stay elevated. Next, officials stressed the need for agile policy moves in the coming financial year, meaning both the budget and the central bank must stay flexible to keep growth on track. Across the globe, Treasury yields are drifting apart from Federal Reserve signals, hinting that the Fed's lead bay. Putting it together, the day's frame is shaped by that Indian inflation warning and the broader question of policy flexibility. Investors are watching the RBI closely, weighing whether higher inflation will force a more hawkish stance. Meanwhile, the global bond market is sending its own signal. Treasury yields are moving on their own, hinting that the Fed's traditional rate-setting power may be losing steam. Those dynamics are feeding into equity and currency moves worldwide. Zooming into India, the finance ministry's recent commentary underscores that the economy is holding up, but complacency would be risky. They're emphasizing that vigilance on inflation and growth trends is essential to avoid any sudden shocks that could derail the recovery. That call for close monitoring reinforces why the RBI's upcoming decision is under the microscope. On the other side of the planet, analysts note that Treasury yields are charting a course independent of Federal Reserve policy cues. If the bond market is decoupling from the Fed, it means the central bank may have less influence over borrowing costs than in the past. This shift could reshape expectations for future rate moves and ripple through equities, currencies, and credit spreads globally. Turning to geopolitics, a provisional agreement between Washington and Tehran has sparked a wave of optimism across markets. The draft truce still needs the former president's sign-off, so there's a degree of uncertainty. But the mere prospect of reduced tension is already easing risk premiums. Traders are watching the headlines closely, aware that a full resolution could lift a major source of market volatility. That's the FinMonkeys Morning Brief for today. The next thing to watch is the RBI meeting and any updates on the US-Iran agreement. Thanks for listening to FinMonkeys. We'll be back tomorrow with the next market setup.